Hey, what's going on, guys? It's TrackFX. We're back with the second part to this Wyckoff series. We're going to be looking at reaccumulation and redistribution. So let's get right into it. So, as we've gone over, we have distribution, accumulation. Accumulation will form at lower price levels at typical demand areas. When price is accumulating, it will eventually expand towards the upside. Now, typically after an accumulation, we will assume that a distribution will form. However, if during the accumulation phase, price has not fully accumulated price, then a reaccumulation might be necessary for institutions. Institutions may need to create a reaccumulation schematic using their volume for many reasons, such as to rebalance supply and demand, right? To fake out sellers, to grab liquidity, to break key levels, to create new structure. You might see formation of new structure, breaking of key levels, right? These are all different reasons, primarily just to follow the agenda. Okay, now vice versa for redistribution, similarly to reaccumulation, you will see that the price will be distributed, right? You'll see a distribution of price occur after a distribution. So if distribution has not fully distributed all the price that's necessary, more times you'll see a redistribution after to complete the leftovers, the supply and demand balance, the liquidity grabs, right? Before price expands towards the downside. So although reaccumulation will be higher than accumulation, the purpose is still to expand price to go higher. And although redistribution will begin after price comes down, redistribution will still expand the price lower. Okay, the only difference is the schematics will look different. So redistribution will not look the same as distribution. It'll look more similar to accumulation. The reason for that is because the schematic begins when the price comes down. Similarly, reaccumulation begins when the price goes up, just like distribution. So let's begin. Take note of these schematics, cement them into your brain to understand them. Okay, so for redistribution, what do we see? Well, as shown on the larger schematic, right? Price will come down and form your preliminary support. Then it will come up, retrace a bit, furthermore expand down to your seller's climax. Price will begin to exhaust at this level, and this is where you will begin to see price rally a bit up, forming your automatic rally. Price comes back down, forming your second testing demand levels, right? Retraces back up to your automatic rally, and then finally expands down to form your test. Now, this is where you begin to see the difference between accumulation and redistribution, because up until this point, the schematic has looked very similar, but you can do a few things. There's a few solid confirmations to differentiate the two. Number one, when you're looking to identify what schematic you're in or what phase you're in, simply zoom out on your chart to see if it is in a key area, if it's a logical area for it to form. For example, if I'm looking for an accumulation schematic and it's way up here where distribution is, it's unlikely I will be seeing an accumulation. However, if it's at a lower price, accumulation may form there, right? Above the accumulation, if I see a reaccumulation, it can either be a reaccumulation or a distribution, but this is where our confirmations come in. So remember to always zoom out to identify where price is at, to see if it's in a logical area. Now secondly, go to your redistribution schematic. If you're looking at your schematic, after the test on a redistribution, you will begin to see a rally towards the upside. Now, there should be a clean rally, right? Highs, lows, high, high, low, right? Forms your second test, comes back up, forms a high, that forms your up thrust. This up thrust test supply. Now, unlike accumulation, it'll begin to form a trend line, right? A trend line will form at the lows of the redistribution schematic, right? After the test, you'll see the trend line that we refer to as a floor. Okay, now we are looking to look for a sell opportunity only after two things. Number one, price has to come down and break below this structure right here. This low has to break below it, so we need to see a BOS and it has to break through this trend line. If it does both of these things, then we can look for an entry at our test and last point of supply. So number one, at our test, we want to see this expansion break through, and then we can look for an entry off our confirmations, right? We can look for an institutional candle around this up thrust that hasn't been mitigated. We can use that as an entry along with our other confirmations. After that, price will continue towards the downside. Ideally, we should see another break of structure, confirming that we are now going to see an expansion towards the downside after this redistribution, and then we'll look for a last point of supply. So if it comes back, if it retraces after this expansion, we'll see our last point of supply tap into just below our test, where we can look for another entry at a form of an institutional candle, and again align it and combine it with our other confirmations such as liquidity, IPAs, fibs, whatever it may be. Okay, so again, up until the test, it will look very similar to accumulation. Then we want to see our rally towards upside and our trend line form, right? We want to see our trend line form just below the lows. Then we want to see the break below the trend line and a break of structure. Only then will we look for selling opportunities. Okay, now let's move over to our reaccumulation schematic. On a reaccumulation schematic, we're going to be looking for price to expand towards the upside and then begin to exhaust, right? So price will come to this preliminary supply. At this preliminary supply, it'll begin to slow down, right? Once it slows down, it'll retrace slightly. Then we'll see it expand towards our buyer's climax. Our buyer's climax can be identified once we begin to see price halt at this level. It'll halt temporarily, it'll stop temporarily, and then it'll retrace and rally towards the downside to form an automatic rally. After the automatic rally, right, we'll have an expansion towards the upside to test supply levels. This will be the second test. Price will come down, retrace, expand one more time to form the up thrust. Now this is where we began to see the difference between between a distribution and a reaccumulation, because this trend line or the ceiling will begin to form. Right, we'll see a rally towards the downside, lows, lower high, low, lower high. Then we should see our shakeout or spring, which is just a break towards the downside, right? Maybe capturing liquidity, breaking below this range. Okay, then in a reaccumulation, we will not be trading the trend line. We're looking for buying opportunities, right? Because we know the purpose of reaccumulation is what? To accumulate orders, then expand towards the upside. So we're looking for buys. We're looking to trade with a trend. So where do we look for our buy opportunities? Well, we look only if we see two confirmations, right? If price breaks above this trend line and breaks structure, we need to see this to indicate it's reaccumulation and not distribution. We must see a break above these clear lows, clear highs, and above this clear trend line. It must be clear. And then we will see a break above structure, break a structure towards the upside. Now we will look for entries at the shakeout or spring, right? Maybe there's an institutional candle that hasn't been mitigated that we can enter off of. There's liquidity, IPAs. Again, just aligning your confirmations for your entries. Now after that, we can look for another further entries at our last point of support, right? So where would that be? Well, we need to see another break of structure of this high right here before we take an entry, right? Price will expand, break structure, retrace, and we can look for institutional candles, again, confirmations before we enter again to take a buy. So these are the schematics. This is how they should play out. They should be crisp, clean. If they're too confusing, if they're hard to understand, then move on. But if they're visible and you're able to mark them clearly and they're showing clear proof, clear breaks of structure, clear jumps above these trend lines or below the trend line, then you may look for opportunities if it presents itself. So let's dive into the market Let's dive into some real examples, some crisp examples. So what we have here is price has just distributed, right? We have a distribution schematic playing out, most likely on lower time frames, right? Slight distribution before price expands towards the downside. Now what we can look for is an opportunity to get into this market. Now after price expanded towards the downside, we can see that it hasn't quite distributed, as we're seeing a redistribution schematic form. So we can mark this up, right? Mark this up. Redistribution box, so we know what we're working with. We can go back in time, right, and see what price is doing. Okay, so price came down and created what? Preliminary support. So preliminary support where price temporarily stalls before it goes lower, and then we see price stop to form the seller's climax, selling that's completely stopped before we have a major rally towards the upside, right? We have this automatic rally form right here, automatic rally, and price continues going down to form our second test, right? If we were following the schematics, these are clear, right? Price comes back up slightly. We have our test forming at this level right here. Now if we draw out our trend line, we can begin to see how price is beginning to form structure and beginning to form a trend line. Okay, so this right here will be our floor redistribution. Okay, so price comes, it's high, low, taps into it, high, low, before we see price expands significantly towards the downside, breaks below the trend line. So that's one confirmation. Now we want to see a break of structure. So we're clearly, let's go back in time. Clearly, it needs to break below structure. There we go. We have a break of structure below this low right here. Now we can begin looking for entries. Now is the right time because we have two confirmations. So this indicates to us that this is a redistribution schematic and not an accumulation, right? Price needed to continue distributing price from this previous distribution schematic. Okay, so where can we look for an entry? Well, we have this institutional candle that has not been mitigated on the 1 hour. If we drop down, we see it aligns with the 45 minute, so that's a good sign. These institutional candles have been mitigated, right? Even this one has been mitigated, right? If we go back in time, still a clean candle, still a lot of entries, still a lot of institutional candles that are near it. See, the previous ones have been mitigated. Go down in time frames, you see there's several potential entries, right? We have another one right here, but if we just stick to our 1 hour for now, right, we can look for the selling opportunity right there. Stops just above the high, and then because we understand that redistribution wants to send price towards the downside, we can target below this low, right, the bottom of this range. Or if we want to, we can go even lower, maybe target some IPAs right here, IPA, a bit of IPA right here, we can even target. So that's a 1 to 5 in itself, right? 1 to 5.96, almost a 1 to 6. Now we can also just let price run now, see what it does, see what price action is showing us. So it comes in, taps into this institutional candle before going lower, right? So what that tells me is that we have now witnessed our test. So we can look for, after this test, is further entries, right? If we want to look for potential re-entries to get into our last point of supply, right? If there's a last point of supply that forms here, we can get in one more time. So let's drop down a little bit, see how price runs. price has broke below our breaker structure right here. Right, broke below once more. Now what that indicates is it's expanded. Now it's retracing, and we can look for an entry. As we see, price tapped into this institutional candle. It wasn't mitigated. Furthermore, there was some IPA action, IPA insufficient price action right here that has to be filled, making it even more high probability. So we could have taken a sell right here, right at the open of this institutional candle. Stops above the high, or just above this high. Because price is following structure, it should not have any reason to come above this, right? We can put our targets at the same target as our 1 hour institutional candle, and let's see what price does after this. Okay, so this is stopped out. However, doesn't mean that it's not a valid area to look for entries, right? Let's see what price does. Right, if we have a breaker structure, this could be our LPS Y right here. If we're risking 1%, we're only down 1%. Price breaks below, we can target this institutional candle right now. Right, if we're doing this quickly, see price is expanded. Now it's looking to retrace. So there's several entries several confirmations we can align with this, but for now, we'll just stick with that. Right, selling off this open, stops above this high, targets below, and let's let price run out. So it clearly taps in simply to mitigate this. Right, we have our LPSY, and this is our full schematic. The full schematic is played out and has done what it needs to do. Supply and demand levels were tested all over the schematic, right? Orders were distributed, liquidity was captured below this trend line, above these highs, right? All over liquidity was captured. If you wanted to mark it up, right? We have liquidity resting above here that was captured. Okay, we have liquidity potential trend line right here. We have this floor that had liquidity below it. For the price run, we can see where it's headed next. Okay, so it taps in to the TP, right? Fills this IPA right here. Taps right into at least a 50%. That would have been combined easily 10% just from this one schematic alone. 10% on this trade. So understand how after all of this schematic is played out, we can see that at the test and LPSY is where we entered. These were the ideal areas to enter and the only areas we entered. Why? Because we needed to see our two confirmations before we decided to enter this trade. And that allowed us to get clean institutional candle entries that have been mitigated, tapped right into before going lower. Now, this is our redistribution. Let's go and look for our reaccumulation schematic. So if we go back in time, we're looking at GBPUSD. We can take a look at what price is doing over here. So if we drop to our lower time frames, we can see that accumulation schematic has played out here, right? Price was accumulated at a low price level, right, before going higher. However, it appears that price had not been fully accumulated and required more institutional action. So institutions need to come in to form the reaccumulation. How do we identify this reaccumulation? Well, number one, what do we see? Price expands up from this accumulation phase. This could have been a reaccumulation, right? So this isn't necessarily a reaccumulation right away, but let's break it down. So right here, right away, we have our preliminary supply. So our preliminary supply at this level right here temporarily halts before going down, expands once more towards the upside. At the upside, we have our buyer's climax, right? Price halts before retracing back to form an automatic rally, right? Price rallies towards the downside, automatic rallies form, shoots back up, breaking above this buyer's climax. That's where we see our second test. Now notice this is already looking very, very similar to your distribution schematic. Right? Everything at this point has looked the same. Now, what does price do? It retraces before shooting towards the upside to form your up thrust. So everything up to this point has looked like a distribution. Now is where we begin to see the trend line formation. Right, price is beginning to form a trend line. Right, this trend line forming right here, even a trend line forming right here. This trend line, as we know, is referred to our ceiling. We want to see a break above the ceiling and break a structure before we look for an entry. So what happens? Price comes down, right, forms a high, lower high, low, lower high, low, lower high. Right, within these there's more lows, more highs, lower, lower, lower highs, lower lows. Okay, finally we have a break above this trend line. So that's number one confirmation. Now we need to see our break of structure. So let's go back. Break above this. Now we want to look and wait for a break of structure above at least these highs. For following structure, we want to see a break of structure above that. So let's let price run. So it breaks above it. And now we have two potential areas for entry, right? Number one, we have this large volume institutional candle, right, that expanded price to break above this break of structure. So it's a valid area for entry, right? Price can come lower or it can tap into this and continue going. So we have this level right here that we can look for an entry. Furthermore, we have this institutional candle resting below here by the shakeout or spring. Shakeout spring. What we're looking at now is we just witnessed price expand, right? Expanded towards the upside, breaking structure. Now we want to look to catch the retracement towards the downside to get a buy-in, right? And this retracement will also be a potential test. This could be a test area. So we have our first entry at this institutional candle, right? If we want to put our stops just below the low. We can also look to take a buy just above the highs. Sorry, just at this institutional candle, targets above the highs. Should be good. Right, where do we set our targets? Well, if we look at our range on the 1 hour, we can put it above, or we can put it even further, right? If we look to our left, what do we see? What is attracting price in this market? Well, notice that there is this IPA right here. So if we measured out the 50% of that, right, that could be a nice entry or area for our target, right? Just the 50% of that. That's a nice 1 to 7 right there, 7%. Now let's go back and look at our second point of interest. Well, we have this lower institutional candle that's less likely to be filled, but there's less risk to it, right? So this is our second area that we could enter off of. Same targets. Now look at our 45-minute. Have this candle right here. Let's see where price takes. So we get tapped in. This is wicked in. Right, let's see where price goes after that. So price is breaking above the structure. Right. It's going higher. Okay, it comes back to our entry. But we are seeing breaks of structure towards the upside. Now, what's happening? Price is expanding towards the upside. Right, it's continuing to break structure. Now, ideally, because this is a reaccumulation, we have our test. This would have been our test phase right here. Now, these could be areas where we see our LPSY or our LPS. Right, this could be a potential LPS right here. Right, this institutional candle. Target this potentially, right? could be a nice entry right here. If you want to break this down, lower time frames. Isn't quite good risk to reward if we go lower. Stops just below this low. Alright, if you want to make it a bit, add a bit more volume, you can put it down here, or a bit more room just below here. But if you prefer to keep your tight stop losses for a higher risk to reward, you can put it just below the low, or give it a bit more trading room. But ideally, the tighter the stop loss, the higher the risk reward, but you're more likely to be stopped out. So let's let price run and see what it does. So it's coming back towards the downside. Let's try to speed this up a bit. It does look like it's going to continue going higher, which it does. So it didn't come back to tap into our candle quite yet. These will need to be mitigated at some point, right? Institutions open these positions, these large volume positions, they'll need to mitigate them at some point. Okay, so the 50% was tapped into, so it was only one entry. However, that is 7%, right? 139 pips, or percentage wise 7% of your capital. Now if we just let price run after that, right, what does it do? So it's been accumulated, goes towards the upside. Okay, so it comes down. Notice that it does mitigate the 45-minute institutional candle that we marked up and goes towards the upside before continuing down. So it still mitigated this position. Okay, then it drops lower, taps into our second POI that we had marked up earlier, mitigates it, and then continues going towards the downside. However, notice the reaction off these levels. Despite them later being stopped out, if you had taken them, price still came back to mitigate these positions. But despite all that, this price action, let's go back and review what actually occurred. So again, accumulation occurred, price expanded, we had our schematic play out, right? Preliminary supply, buyer's climax, automatic rally, second test, up thrust. Up until this point, could have been a distribution or a reaccumulation. Following the up thrust, we had price expand towards the downside, forming this ceiling or this trend line, and we had our shakeout, spring, right? Going below this, capturing in liquidity. Price broke through the trend line, broke structure. That's when we looked for our test. That's when we looked for entry. So we managed to enter off this institutional candle, catching a nice 7% as it rose all the way to this IPA. We set our targets using the concepts we know, right? There's also liquidity resting above these equal highs right here, which gave more reason for price to expand towards the upside. And that is how reaccumulation and redistribution can be found in the market, and how they're utilized, how we take entries off them. Now, feel free to backtest this concept for yourself, implement your Wyckoff trading. I want to thank you guys for watching this video. Can't wait to see you in the future. Peace out.